we had a great idea that we knew in theory worse. I always like to say that, the VEMO thesis is going to be worth of an MBA case study in the best universities in the world because we saw the opportunity. We know that there was a blank space. We knew that to be able to advance electromobility, we had to do everything at once. But doing everything at once really paid off because you were able to invest in charging infra that had visibility on demand from the EV fleets. You had EV fleets that, because they were riding in utilizations with high kilometers, make sense from an economically perspective. So I mean, it sounded right, but how do you actually do that? That was the great, if you think about our risk matrix, that was one of the key risks.
Hi, everyone, and welcome to La Frontera, a podcast dedicated to exploring the dynamic startup and venture capital ecosystem in Latin America and the innovators behind it all. We're your hosts, Cyrus and Tom. If you enjoy this conversation, we invite you to subscribe to our newsletter where we announce new episodes and share additional insights and resources for founders and investors alike. We'd also like to invite you to share this podcast with your friends and to leave a review on Spotify, Apple, or YouTube to help more people discover the show. We love hearing from our audience. You can connect with us on LinkedIn and Twitter by searching for La Frontera Podcast. Hey folks, welcome to another episode of La Frontera. We're your host, Cyrus.
Hey Cyrus, I'm Tom.
I think you're making this on purpose to make you feel comfortable.
Keep it fresh.
Today we're sitting down with Nico Estrada, CFO of VEMO, a Mexican startup that integrates the entire electrified mobility ecosystem. Nico, welcome to the podcast and thank you so much for being here.
Thanks, Cyrus. Thanks, Tama. It's a pleasure to be here, share with you guys about me, about VEMO. Thanks for inviting me and looking forward to this conversation.
Yeah. And as I know, I think we've got some exciting news to share as well throughout the conversation. So I'm excited for it.
Yeah. Timing couldn't be better.
Yeah, right. So I'd love to start off by giving our listeners just some background on who you are as a person. We know that you grew up in Colombia, studied and began your career in the United States, and then later returned to Colombia before you moved to Mexico to join VEMO. Can you walk us through that journey and give our guests a little bit more context?
Yeah, sure. Let me give you the full background, right? I did grow up in Colombia, particularly in Cali. Cali is the third largest city in Colombia. And I think ever since I was a child, I had the drive, right, of going to the US to study. And I knew that thanks to the school where I was at, and also the fact that I played soccer, I had the ability of perhaps joining those two circumstances to be able to achieve that goal. So I prepared myself. I ended up going to a school in Texas, in San Antonio, Trinity University, great liberal arts school, where I got to play collegiate soccer. And I also got to, expand into my interests from a business and an economics perspective. I pursue a business and an econ major, concentrating in finance and accounting, and was then able to leverage that to be able to start my career in Texas. I moved to Houston. I started my career as a management consultant, started learning from different companies, best practice wise, what they did. Particularly, we were advising that time energy companies and particularly the finance departments. So I got to see how these companies operated, how they structured their operating models. And that was a great experience for me. After a couple of years, I had to move back to Colombia. I think that was an unfortunate event because it was not part of my plan. But the thing I've learned is that the plan doesn't always go your way. I moved back to Colombia and I decided to pursue a different avenue, very similar to consulting, but I think a little bit more challenging, which is investment banking. So I got to work for this boutique investment bank in Colombia called Sumatoria. And I think that was my alma mater, right? That's where I really developed who I am today as a professional. I got to spend time with the partners directly. Being a boutique firm, you have exposure to the partners very early on. And that's where I started developing this keen knowledge of how to understand businesses, how to structure different projects, how to think in different dimensions, which is, I think, one of the most important things that investment banking teaches you. Plus, I did it with a team of people that I respected, that I really admired, and that inspired me. I think I spent there close to 5 years, particularly in the sectors of power generation, renewable power generation, and infra projects, all the way from highways, to gas transmission, companies. And slowly I started, to get to that point in the curve where it's not as steep as you want it to be. And I started to look for opportunities, not proactively because I was really happy where I was, but all of a sudden, a friend of mine called me about this opportunity in Mexico for electric mobility, right? That was in 2021. I think electromobility in Latin America was still too, and is still too nascent, but back then it was even more. Without actually wanting to say yes, started listening a bit more about the opportunity. I got to know the two co-founders, and it recently suddenly hit me. I think the people and the two co-founders were really the reason as to why I said yes. But I really saw this as an opportunity to also test myself beyond what I've done. I think someone that had started his career as a consultant and then moved into an investment banking position always was an advisor. And I wanted to see myself not as an advisor, but also as a doer, as someone that was part of a company that was applying that knowledge into the day-to-day operations. So I saw that as an opportunity to do that. Plus, I saw electromobility as this mega trend that was eventually going to explode. And what better opportunity to join that mega trend that early on. And
Yeah.
lastly, and that's very important as well, I saw Mexico as a great market to test myself. So I think that at the end, it was just this opportunity to expand my comfort zone, to test me in another market, in another industry, and in a different way of working. And paired that with two co-founders that inspired me, that had that same, background as myself, which I looked up to and which I wanted to keep learning from, were the major, decision makers as to why I decided to move to Mexico and pursue this VEMO opportunity, which back then, honestly, was just a great idea. A great idea that we'll talk about this more in the podcast that seemed complex, but within that complexity, like the beauty of the thesis, right? So that's
Yeah.
that's how I made it to VEMO, Cyrus Tom. I think that just a little bit more about myself to give you more context. I'm a huge soccer fan. I think sports has been a core pillar in my life, and I work just like as I practice, just like as I've prepared myself, and that has also been one of the reasons that I came to VEMO. I think Herman, one of the co-founders, connected with me from the soccer perspective, and that was one of the reasons why I ended up deciding to work with him.
Yeah, that's incredible. It's always so interesting to see folks' unique paths to where they are today. And I think what's really amazing is just how the sequence of events that made you like who you are today and why you're at VEMO. Where you are today is perfect because you studied accounting finance, right? You worked in investment banking in the energy sector, and now you're the CFO of a electric mobility startup.
Yeah.
And so what I would like to learn a little bit more about is what about the thesis convinced you that this was the right bet to join as the first non-founder hire at VEMO and leave your lucrative investment banking job? What was it about VEMO? What was it about the team that really convinced you to go, yes, I'm going to take this leap, take on this risk, and join this really early stage company?
No, thanks for your words. And I think you said it in that's part of your question. The team, right? That was the most important thing. The team, starting with Roberto and Herman, the two co-founders. They were the two guys which I spoke to first when I was just hearing about this thesis, right? And their drive, their experience, their background, their personal values, which I share, were the two main reasons as to why I said yes. Now, moving on to the thesis itself, I think that's part of also having a background in IB. I think that when complexity doesn't scare you, and you're willing to go that step further into understanding the complexity of why the thesis, that's when you start looking at the magic and the beauty of the thesis. And that's what I did. I first heard about it. To be honest, the elevator pitch at the beginning wasn't even clear to me. Gave it a chance because first I trusted my friend who was recommending me. Second, I trusted the two co-founders, which if they were pursuing this, it was for a reason. And third, because I recognized that within this electromobility trend, in Latin America, you had to do something different, right? And what was the thesis? Now, I think like going into that detail. Well, in Latin America, you don't have the subsidies that you have in other mature markets, right? So if you want to accelerate clean mobility, if you want to accelerate electromobility, you have to, in a way, push everything at once. You don't have, specialty companies that are already pushing from their side in the charging part. You don't have fleet operators already pushing electric vehicles within different utilization segments. You don't have technology that has already been developed. So when I saw that opportunity, I said, okay, this makes sense. This makes sense because first, there's no one else doing it. Hence, you have a first mover advantage. Second, if you have the capital, which thankfully we had to deploy and deploy quickly, it makes sense. And third, if you are pushing all the pieces of the puzzle and you're not depending on anyone else, you have more control into how you can actually make this a reality, right? And I think those factors were really interesting. And at the end, for me, were what would make this a success. Fast forward, and I wasn't too far off. I mean, if you pair that with a team of people that know what they're doing, that have a discipline, that have also experience within each of their segments, you can make this a reality. Now, to give you a little bit more context into how this came into play, VEMO was not built, from nothing. It was the result of the acquisition of initially 4, then 5 anchor companies, which were all in a way contributing or at least working in a space related to electromobility that when combined together allowed us to create this ecosystem play, which is VEMO. So that was something that really also convinced me. And the founders from these anchor acquisition companies were people that I also really liked and that I looked up and also thought that would be great to learn from them and work alongside them. So it nails down to the people.
Yeah, it makes sense. I mean, it's the same story kind of with all startups, but VEMO is so unique. And you talked about a little bit of the origin. I want to dig in a little bit more into that. Can you break down the business model, the ecosystem that you guys have created, and then also the financing, right? Because you guys aren't necessarily like VC backed. You're, backed initially by kind of private equity. So just kind of how you guys work.
No, definitely. I think before I jump into the financing and the business lines, kind of give you this elevator pitch, right? VEMO, we're looking to accelerate the adoption of clean mobility, right? And we're trying to do this in Latin America, in that context, which I described before, through a very unique and pioneering integrated solution. This turns out into combining the main pillars of electromobility, which are, EVs, charging infrastructure, fleet management technology. And these all 3 pillars allow you to be able to push the ecosystem forward. And the vision is actually very pure in its essence. Like we do want to transform mobility. We do want to have an impact in how people move in Latin America, particularly in Mexico today, because we see 2 huge impacts. 1, cleaner air, and 2, contributing to the emissions towards, this climate change that we've been experiencing. So it's very pure in what we want to do. We have the skills, we have the team, we have the business lines to do it. And hence our mission is that. Plus, if you think about what we do, we generate employment and we promote financial inclusion. So now with that kind of like a summary, let me tell you a little bit more about VEMO. VEMO is a company that has 4 business lines, right? We have 3 segments in which we focus: ride hailing, commercial fleets, and charging infra, but 4 business lines. Within ride hailing and commercial vehicles, commercial fleets, we have 3 products. One is within ride hailing, VEMO Conduce business, which is a business which we operate a fleet of north of 600 EVs in Mexico City, partnering with Uber. We employ north of 1,500 drivers for that business. And that was the business that allowed us to kickstart everything. Today, we have traveled north of 200 million kilometers since 2021, more or less 10 million kilometers per month nowadays. It works in a very particular way. I like to say like a Swiss clock, because these are vehicles that run 2 shifts per day. They're out in the streets 18 out of the 24 hours. And they are the reason that most people know us in Mexico City, because they're branded VEMO vehicles that you see in the streets. Now, the second business that we have within ride hailing is called VEMO Impulso. This is a leasing business whereby we're providing leases, financial leases to individuals, gig economy workers that work for Uber or for DiDi, so that they can have access to a vehicle, work that electric vehicle, pay up the vehicle with what they generate in these platforms, and at the end of the lease, become owners of the vehicle. So that's very important for us as well. Lastly, in the commercial fleet business, we have the same financial leasing product, but for companies that are looking to decarbonize their fleets, companies that move product, move people, that as part of their operations have fleets. They are also looking into how they can eventually migrate their fleets from combustion engine vehicles to electric vehicles. The truth is that they don't know how. And we have the knowledge, we have the expertise on how to do it, because we do it ourselves. And we're offering these services to them as well in different forms. We can provide the charging infrastructure as a service in a way that we invest in the charging infra, we build it and we operate it for them such that they focus on their core business. But we could also do it alongside the fleet, such that we have a fleet as a service offering that combines charging infra, vehicles, and more importantly, the technology, which is always part of the solution that we provide. So they have a complete visibility of how their solution is working and also have a clear view on how the electric vehicles, the charging infra are performing such that the investments last what they eventually intended to. If you see these are two business segments that have a similarity. They run a lot of kilometers per day, and that is a key variable to make electromobility work, particularly from an economic point of view. The more kilometers you travel per day, the more it makes sense for you to migrate from a combustion engine vehicle to an electric vehicle, right? So that's why we focus on those two high utilization segments. Now, what are you lacking, right? You cannot push, electric fleets into the streets if you don't have the backbone, you don't have the charging infrastructure to support those fleets. Hence, VEMO's thesis. Hence, why we decided to push that alongside the fleet business. We have a charging infrastructure that serves both public and private clients that has allowed us to today be digesting more than 5,000 recharge events per month, right? Today we have north of 1,200 connectors already in our network that have multiple clients, starting with our own clients from VEMO Impulso, our VEMO Conduce fleet, plus clients from the EV fleets, this commercial fleets business that are looking for a solution to charge their vehicles, right? So that's how the thesis, materializes. You are pursuing two segments of transport that have high utilization that make sense to electrify, plus you're supplying the charging infrastructure, which is the backbone for those vehicles to be able to charge. But also, if you think it the other way, you're investing in a charging infrastructure with visibility of demand. And that visibility of demand is what also gives us the ability to invest the way we have, to be able to be disciplined into how we deploy capital. And I think it was what differentiates us from the competition. And not only in Mexico, it differentiates us from peers and from reference benchmark companies in Europe or in the US. Because if you think through what I just say, this thesis was not necessarily one that would work in the US or in Europe. This was a thesis very prone, very applicable, very suitable to LatAm, particularly to Mexico, where you had this blank space back in 2021 to be able to deploy capital, deploy vehicles and charging infra in this structured way, such that it eventually worked.
I think what's so interesting about the way VEMO came about is the roll up that you guys did from the very beginning, leveraging private equity capital to grow almost immediately, considering that you guys are where you're at right now, but you started in 2021, so pretty much only 4 years ago, right? Which is insane. I think the way you guys approached it has been really interesting, which is it's kind of like the chicken and egg problem, right? Like you want to have electric cars, but you can't really have electric cars and clean mobility without the infrastructure in place, right? And that infrastructure includes the charging, but also the maintenance infrastructure, right? So you have both of those. And so you kind of need both at the same time. And so I think the way you guys approach that of going and acquiring the companies in that space to kind of have an immediate hold and like have all the infrastructure and the cars in place has been really interesting. But something that I also want to chat about is going to be around the financial inclusivity that you guys provide as well, because everyone knows that Mexico City is full of cars, but cars are not cheap, right? And so that's where owning a car can be tough and getting a loan to own a car can be tough as well. So I would love to dive into the partnerships that you guys have built out with your car suppliers overseas and how you guys are able to, and also the lease to own aspect as well that you guys have built out.
Yeah, no, great. And I think I'm going to tag this answer to what I just said before. The reason as to why we do what we do is also because we do want to contribute to our society. And the most visible way of how we contribute, of course, is through, the electric vehicles and through the environmental part of the business. But that's not the only thing that we do in VEMO. We also have a very clear social mission, and it's to be able to promote financial inclusion in a country where credit ability and bankability, if you will, is not a commodity. And I think that's also another reason as to why this thesis works in Latin America, but perhaps would not work in more mature market where credit is a commodity. So most of these individuals that want to work in Uber and DiDi, they have the drive they are willing to put up the hours, but they don't have access to credit because for X or Z reason, the traditional banks are not lending to them. And that makes them, a suitable client for us, for a company that is willing to look beyond just, the credit bureau, which we also look at, but also to look at how they have been performing working in Uber or in DiDi, perhaps when they're driving a vehicle from a cousin or from a friend, right? But if they already have that discipline in place, those metrics in place, why not lend them and provide them with this asset that generates wealth and at the end of the day becomes a vehicle that they can own and perhaps in the future take a second or a third lease and become fleet operators themselves. So that's part of why we do what we do now. How do you actually execute that? Well, you have to execute it with partners. And that's something that we also proved on early on in VEMO. We always say that the DNA of the company is partner driven. Ever since the company started, we partner up with Uber, right, to be able to push out the VEMO Conduce business, but also the VEMO Impulso business, because one of the companies that were acquired was already a partner of Uber doing this financial lease business. Now, when you think about how to deploy electric vehicles, that's a different game, right? You have to have the right product at the right price with the right operational and technical capabilities to work. You have to have the charging infrastructure in place. You have to have somehow incentives to make the economics work for our clients, such that their take home is higher than what they usually earn if they would drive an internal combustion engine vehicles. And you need the platform to be able to generate the leads and of course follow through the lease itself. So to be able to do that, think about it. We had to partner up with Uber and then DiDi to be able to, generate leads that had already been proven at their platform. Second, we need the right collaboration agreement for them to also be incentivized to work in their platform. Second, we needed the right vehicles. So we started talking with different OEMs back in 2021, particularly with BYD, and started asking about how their product could definitely be a product that works in ride hailing. Because ride hailing vehicles, if you think about a vehicle that's just running one shift per day, are perhaps running 200 kilometers, 240 kilometers per day. Now, a vehicle that is doing that amount of kilometers has to be built for that solution. So we started discussing with BYD, with other brands such as Jack, more recently GAC and so forth. And we detected and we identified vehicles that were prone to this use, but that were not being sold in Mexico. So we had to eventually be able to import these vehicles. And back in 2021, BYD didn't have presence in Mexico. So we had to actually develop a workshop ourselves to be able to perform the after sales services for those vehicles. And that, I guess, entrepreneurial spirit and that way of working with these partners was what allowed us to now have an array of vehicles that work and that at the end of the day have a price range that is suitable for a lease of a person that's driving in Uber or in DiDi or on any ride hailing platform. Now, when you close the loop, you need the charging infra. And for the charging infra, we didn't have any partners. We had to develop it ourselves. But when you close that, I guess, last part of the puzzle, you can start developing and start originating electric vehicles at scale, like we've done in the last couple of years in VEMO Impulso.
Yeah, it's amazing, kind of the entire business model that you guys have built. I want to touch on a little bit about like the partnerships. And I guess like a quick kind of anecdote, my first kind of interaction with VEMO was last year. Cyrus and I were in Mexico City. And as typical gringos coming down, we're expecting to use Uber easily. Sometimes those cars just weren't available. Like it seemed like there was like kind of a supply issue. Sometimes we had to wait. And then when you do get picked up on just kind of like I guess it's Uber Ja, or like, you just get picked up by a regular Uber. The car's not the nicest, right? Sometimes it doesn't have AC. And when you're, locked in Mexico City traffic for an hour with the blazing sun, can be an issue. And I remember a couple times getting picked up by like a sleek EV, like mini SUV, supposedly supplied by VEMO. I would be a little bit confused for a second, but, quickly adjust and accept it. So I think it's a kind of a cool change of pace. And it seems like you guys are targeting that supply issue that ride hailing apps have, that Uber, has, where a lot of people want to be working with Uber, but don't necessarily have the car to actually do it, or a car that's, I guess, like nice enough to work it on a daily basis and drive all those kilometers. I wanted to ask about that partnership with Uber. How did that come about? I think the value prop for them is pretty clear. Having more cars that you guys own, having more drivers able to actually work on their platform just kind of expands their reach. But we'd love to hear about the story and how you guys approach them.
I think that one of the companies that were part of these anchor acquisitions had already been working with Uber for a long time, originating leases, but for ICE, internal combustion engine vehicles, right? So they had that relationship going. Now, the two co-founders also had a relationship with Uber. And before actually being able to place or originate leases of an EV, we had to start with a business that we control ourselves and that we were sure that we could deploy these vehicles without having to rely on the fact that vehicles were cheaper or that the public charging infrastructure was in place. So we ended up, before actually deploying electric vehicles as part of the financial leasing platform, deploying this VEMO Conduce business, which is the one that you were a customer of. That business was, as you said, a business that really interested Uber as well, because it solved, I think, two of their great challenges. One is supply hours. They want to have more vehicles on the street, and our VEMO Conduce vehicles are supplying 18 out of 24 hours per day. Plus, if you think, it's also contributing their decarbonization goals from an Uber platform perspective. They, as a company, have also made some electrification pledges, and it's very hard for them to actually control how their customers switch to EVs. Well, with us, they had a great partner that was willing to do it from the get-go, plus having these supply hours. So that partnership really allowed us to be able to deliver on this thesis, first with VEMO Conduce, and now today at scale with VEMO Impulso, Tom. I'm happy that you were a customer of one of our vehicles.
Yeah, and hope to continue to see like more and more cars on the road, right? And it's really interesting that you don't think about Mexico and LatAm as kind of like propelling forward the EV movement. And I would be curious to ask, like, kind of when you guys are thinking about that like opportunity, where do you see like kind of the transition and growth in EVs in Latin America? Where do you see it like a few years ago? Where do you see it now? And what are kind of like the hopes?
Yeah. So for context, when VEMO was founded, 2021, I think that only 500 EVs were sold in Mexico, right? That's crazy, right? And the reason was that those vehicles were all luxury vehicles. They're all above the 100K mark. There were only 10 models out there, the typical brands that you can think of. Now, today, you have north of 80 models. You already have 10 vehicles that are below the K mark, the 25K mark, and 4 below the 20K mark. That has turned out into, in 2024, having sales of north of 80,000 vehicles in Mexico, including plug-in hybrids and battery electric vehicles. So the trend has materialized, the sales have increased, and that's for various reasons. One, the technologies and different alternatives have become available, not only from a standpoint of the price, but also from the functionality itself, right? Second, the electric charging infrastructure available has become more present, particularly ours, that gives visibility into customers that are willing to purchase an electric vehicle. And lastly, there also has been this trend, and I believe this is also important, of people recognizing that this is not something of the future. This is something that is already happening today. And people do want to, make the change. And when you already have the options available, you have the charging infrastructure in place. And the only thing that's missing is actually you being able to make a decision that's better. And that's how you close the loop. How do I see this evolving going forward? Well, it's going to depend a lot also, Tom, into, how this influx of particularly, Chinese vehicles turns out in the future, considering that there's this uncertainty regarding tariffs.
Right.
But if EVs continue to be cheaper, if people continue to see that there's more charging infrastructure out there and they continue to follow that, feeling, that gut feeling of eventually taking the leap or migrating, the trend should continue. Now, if we do face incremental tariffs, we're going to definitely see a bump there in the adoption of electromobility in Mexico, but that's something that we'll have to wait and see.
Yeah, long-term trend and positive momentum versus hopefully short-term shock of tariffs, but I guess we'll see how that develops.
Yeah. So I would love to start talking a little bit more about, financing, the fundraise that you guys recently did, because I think that's super interesting. But before we do that, looking back on, the whole first couple of years of Venmo, right? Acquiring the different companies, integrating them, et cetera. What was one of the hardest parts about building Venmo's integrated ecosystem? The vehicles, the charging, the tech, like what was it and why?
I think that the most difficult part was, getting the team right. I think, and this is part of also how I've seen the business grow, how I think about business, and business are people, and getting the right team in place, maturing as a team, because it's not only about having the people, it's the people, how they work together. For me, that was the most difficult part of all. Now, talking about the business per se, I think that developing the charging infrastructure with the right visibility on demand was the toughest. Now, we always knew that the thesis was to be able to, deploy charging infra alongside fleets, that those fleets were going to charge her. Hence, that your charging infrastructure investment was going to have utilization. But that sounded super streamlined. Now, actually being able to have those fleets in place, plus having the charging infrastructure in place at the same time, navigating permitting with the local state utility, navigating the contracts with the real estate owners, and eventually building the site per se was tough. Now, we had a great team. That's why I come back to the team who already had experience of how to do that. And that was the magic behind of how we eventually came up to doing it at scale.
Something that you've mentioned is you intentionally surround yourself with people that could one day do your job. How did that play into you guys when you guys were building your team? And maybe you could talk a little bit more about your rise through Venmo, because you obviously didn't start as a CFO, right? So I'd love to learn a little bit more about like how you started and then the team that you guys built up along the way that allowed you to accomplish what you guys have done today.
Nice. Yeah. So when I joined, I wasn't the CFO. I joined as a person that was going to lead the business development and eventually corporate development efforts. But when a company is, just an idea, PPT with 4 anchor acquisitions, your first job is not actually doing what you were hired to. The first job is to be able to help materialize these thesis into a reality, right? I like to say that I was the todero. That's a concept in Spanish of I was the one that was doing everything, right? I was the project manager. I was working for the website. I was also being the one that built the decks. But that really, I always like to say it, is what gave me the depth and the knowledge of VEMO, because I had to work with almost everyone in the company, from, the co-founders all the way up to the operators, to understand the main costs of the operation, through also across the different business lines and across the different cross-functional capabilities and their leaders. Because my main job at the end was to be able to translate all of that into a financial model, into a business plan, into a budget, into a corporate deck that could then be communicated to potential investors. That was also the basis for all the presentations that we did to the board and so forth. That was my crash course into VEMO, and how I started my career here, and how I ended up eventually evolving and stepping into the CFO role when the opportunity emerged. Because I was doing, as I like to say, the most sexy part of the CFO role before being the CFO. I was co-leading the fundraising efforts with the 2 co-founders. I had a great team that was working with me, as the internal, as you said, investment banking entity of the company. Plus, we were also helping not only raise capital, but also make, better decisions in the business per se, because the financial models that we built were at the end the tool that helped us, tweak X and Y from each business to be able to improve the IRRs, to be able to make better decisions. So that's how I eventually became who I became. And I thank the fact that I had that crash course, and that I had to work with everyone across the organization to be able to have that knowledge of the company, such that when the opportunity to be a CFO showed, Pluto and Herman really bet on me. And with something that I always like to say, with the trust that I had gained, they definitely decided to give me the CFO position, Cyrus.
Yeah, no, that's great. And I'm glad you brought up trust, because I know that something you always talk about is walking the talk and building trust in the team. Would love to learn a little bit more about that and how you go about building trust in the team. And, maybe we can tie that into like your theories on, or your perspectives on in-person work versus like remote work.
Yeah, of course. And walking the talk is also like another way of saying of being coherent, right? Being consistent in what you say, how you behave, and how you expect people to, right? And I think that's how I like to lead, because that's how I've been fortunate to be led by my former bosses, my former leaders. So I try to walk the talk by being there, by leading by example, by showing my team that my job is for them to succeed, because if they succeed, I will succeed, right? That selfless thought is really what eventually I looked up in my leaders, and I want the people that work with me to look up from me. And it takes a lot from you, right? Because as you grow in a company into leadership positions, into more senior roles, people tend to think that that's, being more executive, being perhaps less busy, if you will. For me, it's the quite opposite, right? With more power comes more responsibility, right? So when I grew up into these leadership roles, I saw it as an opportunity to keep showing the people that I work with that I'm there with them. I'm there in the trenches, asking a lot from them, but also giving a lot to them. And that's who I am, not only in my job, but in my personal life. And that generates trust, because when people see that when you say stuff, you're also acting accordingly, they trust you. And I could say the opposite. If they see someone that speaks a lot and talks nicely and that really sounds like someone that you would definitely admire, but then in practice you see them being someone totally different, that's when you think this person is, full of, BS, full of something. That I like to think myself of the opposite. If I'm talking, if I'm asking, if I'm demanding something, it's because I will do it myself as well. And that's part of walking the talk, Cyrus. Now, to the point of working with people that can one day take your job, I think that everyone should work like that. I mean, you should be always looking for a team, a high performing team that contributes to your growth, but is also someone that keeps you on your toes, but that is also someone that could be you, because that way you're also pushing yourself to be better every day. You're also pushing yourself to, be at the level of that person that has those ambitions that wants perhaps your job. And it's selfless and it's selfish in a way. It's selfless because you want to see them grow and you're betting on them and you're being there with them. But it's also selfish because it's a way of you, having that pressure on. Plus, and to close that point, it's very difficult to grow if you don't have people below you that are going to grow with you. It's very difficult to grow if you don't have a succession plan for what you're doing. And I think that people have to think about that, because I've seen so many talented people that haven't grown to what their potential is, what you see in them, because they don't have someone that is going to step into what they were doing before. So that's how I think about that.
Yeah, that's definitely a great way to think about things. I've heard that from a lot of successful people, is like when they're hiring someone, they want to see a little bit of something that's a little bit different from, maybe how they work, but also like someone who could turn out to be better, right? Better than them in what they do. I want to ask about something that you touched on a little bit about part of your job, and part of it is fundraising, right? And, one of the keys to your sort of rapid growth at Vemo has been all the money that you've been able to raise. Can you talk a little bit about the debt and equity mix that you selected kind of as CFO, and how you kind of went about deciding when it is right to, raise equity versus debt?
We've today raised north of $500 million, combining equity and debt. Roughly 350 million come from equity investors, namely Riverstone and Vision Reach, and over 150 million from lenders, both local and international lenders. International lenders like OIC, or Orion Infrastructure Capital. And to your question of the right mix, I think it's been a matter of how the company has evolving and how it has been maturing to be able to unlock different pockets of capital. The initial round was funded by Riverstone, and that allowed us to, the four anchor acquisitions, to actually execute those, plus develop on this thesis early on and be able to materialize the business lines. Now, once you have the business lines, you still have to get to that scale portion, that scale that allows you to, with unit economics that work, to digest, fixed costs, to digest G&A. And I think that part of the story of Vemo required someone like OIC, a structured debt capital injection that allows you to keep investing on your assets, on your products, and reach that scalability where you can further unlock growth equity, which was this latest round, which we closed with Vision Reach and that has been announced a couple of days ago. And that is one of the things that makes us most proud of, because being able to add on top of, Riverstone, OIC, plus the local lenders, which also bet on VEMO, seeing the strong, financial performance of our financial leasing business and of our other businesses. Well, if you combine that with a commitment from an American private equity, with the reputation that Vision Reach has, with the expertise that they have within sustainable asset investments, where that's when you actually realize that what you're doing is on the right track. And I think that thanks to the fact that in the last couple of years, we managed to secure those pillars in terms of partnership with the right partners across, OEMs, ride-hailing platforms, banks, financial institutions. Plus, we have shown delivery, which is for me the key that has unlocked capital, was what eventually made us ready to be able to unlock this growth equity round from a partner with the reputation, with the acumen of Vision Reach, that comes in to add value alongside the other investors which are today in the company. So that's how it came about, right? And just to double click on the doers point, I think that today you see a lot of great ideas, particularly when you talk about, ESG driven companies, because they all sound right. Everyone is rooting for these companies to work, right? Because they are going to have an impact. You're going to want them to see grow and eventually scale up. The fact is that doing that takes a lot of work and it's tough. And to become a doer, you have to think outside the box. You have to be able to tap into different avenues. You have to be really, really persistent and resilient, which I think is the key word here. And that's what we've done. And that doer, I guess, milestone, trans-milestone mentality that at VEMO we have achieved is what has allowed us to be able to also gain the trust, going back to the concept of investors. Trust that every time builds on trust, because if, OIC saw that Riverstone had funded the companies, of course they trusted. Plus they saw the delivery. And, the local lenders that bet on us saw that we had a private equity and a lender from the US, such as OIC, invested in VEMO. They recognized that trust. Plus, they saw the numbers, they saw the team, they saw the people, and they invested in us. Now, when you go to the latest round, Vision Reach sees all of this, and they see that everyone else has trusted. Plus, we have delivered. Plus, we have a great team to be able to execute. That, at the end of the day, is what does the trick. And it takes time. It takes a lot of time. It takes a lot of effort. It takes a lot of losing up your hair in my case, but it's part of, I believe it's part of what it has to be done. And I'm really proud of what we've done, because in this macroeconomic environment, it's not easy, and the team did it.
I think your hair looks great, by the way, for the record.
Thanks. It looked better a couple of years back.
And I'm glad you double clicked on that though, because that's super important, like building that trust to then, get those sort of big name investors. And that's especially difficult, I think, for a company like VEMO, which is super capital intensive. So the financing is so crucial, but I'm sure not a lot of investors, have maybe the stomach for that. I mean, Uber themselves, had considered at one point, owning their own fleet, but they weren't actually ready to take all the risks that is included there. But, you as CFO are very aware of the capital and intensivity and all the challenges, but it sounds like you guys found the right partners that totally understand and make the numbers work.
Yeah. Part of that was also, the background of the two co-founders. So my background, how it connects to them, and the fact that they know, understand how these, large private equity or large financial institutions work. Early on, even before talking to these institutions, we were already structuring the plan in a way that it was, economically sustainable. I think that's the term. That means, having positive unit economics from the get-go, knowing that to be able to be profitable, you have to scale up, but you have to scale up with positive unit economics that if you end up investing more and more, will allow you to get to that, breaking point. Second, being very, very, and I think when I emphasizing this, very structured in how we think about the risks of the company and how we're mitigating those risks. I think from early on, the first thing that we developed was a risk matrix, and that gives you clarity into, pitfalls and potential black swans that perhaps you might not see, and that mentality prepares you to have conversations with very sophisticated individuals and very sophisticated funds like the ones we discussed with. And lastly, in time. And I think that's one of the things that unfortunately kills many startups today. But having time to be able to develop that trust, not only with, nice decks, with, nice pictures, nice press releases, but with actual delivery and conversations that generate trust is what allowed us to be able to get to where we are today. And
Yeah.
that credibility took time, but it helped us in a way because we started early on. So you have to start thinking ever since you found the company of how you're going to position it towards investors, because that not only gives you the benefit of time, but it allows you to structure the business early on in a way that you're thinking of those risks that are not materializing today, but that might materialize in the future. And that's part of how we think here in VEMO.
It's funny because just yesterday I was talking to a couple early stage founders as they were preparing for demo day, and my question to them was, what is your secret sauce, right? Like why will an investor back you versus the other folks with similar ideas and similar teams? Like what will set you apart? And I think what's so interesting about VEMO is just how incredibly stacked the team was from the very beginning and how you guys approached it. And I think that's what really built that trust from the investors in you. Obviously, I don't want to speak for them, but that's at least our evaluation. Something that I want to talk a little bit more about is early on, you were VEMO's in-house investment banker, right? You guys were evaluating segments, financing needs, growth opportunities, et cetera, when it was just like an idea, right? So we'd love to learn a little bit more about like what that looked like. You guys obviously had that private equity experience, the investment banking experience, but what went through those strategy meetings in the early days on like how to structure VEMO, what kind of companies to acquire, where to acquire them, things like what did that look like?
Yeah. It was one of the most interesting experiences in my life, right? Because it required patience, work. It required humbleness as well. You had to be really humble because you had to question things that perhaps didn't work. It required very intense and very interesting discussions. It required a lot of research, and it required team effort. So I think that's the summary. It was a very interesting process because we were, like you said, the investment bankers, but we had great leadership that knew where we had to get to. We had a great idea that we knew in theory worse. I always like to say that, the VEMO thesis is going to be worth of an MBA case study in the best universities in the world because we saw the opportunity. We know that there was a blank space. We knew that to be able to advance electromobility, we had to do everything at once, but doing everything at once really paid off because you were able to invest in charging infra that had visibility on demand from the EV fleets. You had EV fleets that, because they were riding in utilizations with high kilometers, makes sense from an economically perspective. So, I mean, it sounded right, but how do you actually do that? That was the great, if you think about a risk matrix, that was one of the key risks, the execution risk. And to do that, you need constant, planning, constant evaluation of how things are working vis-a-vis an Excel, vis-a-vis the reality. And that was what we did. We had financial models that seemed like everything was going to work, but 2 or 3 weeks in, you started looking at data and things were not as you projected them. So you had to have that agility, that dynamic capabilities to be able to quickly rethink about what you were doing and be able to structure it in a different way. So that process was a lot of long nights, Cyrus, a lot of, kind of like starting from scratch financial models that we thought worked, questioning everything, trying to look up for best practices from companies in the world, but without having a clear benchmark, because there's no VEMO-like company in other parts of the world for us to just, follow this guide and be able to have this route forward. So it demanded a lot from the team, but it ended up being the best way to constantly improve and constantly make better decisions. And that started with, talking with investors early on and having them challenge you. Because I think an advice that I would give to every company is try to be open about what you're doing, about your challenges, about your business plan, about early on, because the more that you talk to the people out there, the more feedback you have to be able to also improve and recalibrate and be able to, with the benefit of time, get to that ideal point to convince an investor to back you. So that was the process. I think that Roberto and Herman were fundamental. I mean, their vision was clear, their experience was there, their work ethic was there because it took a lot of hours, and that inspired me, and that's how I inspired my team, and how all the company at the end of the day also helped, because people knew that when we were talking about, business plan, when we were talking about an investor visit, a site visit, or an investor call, everyone knew that they had to be, on their toes to be able to be there, provide information. So it became this company-wide project that ended up eventually translating into these capital fundraisers that I discussed.
Yeah. So something that you touched on a little bit was personal relationships. I think personal relationships are just so important in terms of raising any kind of capital, because at the end of the day, the investor has to trust you. It's money, right? I personally don't trust many folks with my money. So I'd love to dive into that, and then just learn a little bit more about how maintaining relationships over time and maintaining a friendly relationship with folks over time, even if they've denied you from capital. We'd love to learn a little bit more about how you guys managed that and navigated that, and would love to hear a little bit more about how you then built your personal board of directors.
Yeah, I think that has been the theme of the conversation, but it's trust, right? And
Truly.
the way you gain trust, it's, I think, time, again, walking the talk, and also I think, and it's very important, constantly nurturing that relationship, because people sometimes, I hear people say, yeah, I have this really close friend or close relationship that they're like a brother or sister to me. We never speak, but every time we look at each other, we see each other, it's like time never passed. And I understand why they say that, but you have to nurture the relationship. And from a business perspective, it means keeping these investors part of your progress. So one of the things that we did, and I do want to recognize, is that behind every headline, this big fundraising headline that we just announced, there's so many no's behind, right? There's so many difficult experiences, but people only see perhaps the good side, the press release. But behind that, there's so many moments in which you had to recalibrate, in which you had to perhaps take a time and discuss your business plans with other people to be able to come back with the other investors. But that process is what eventually takes you to the finish line. And that process involves starting on really early and keeping these investors up to date in where you are, because it's not only about your business, about the founders, about the idea. It's also about timing, and timing in life always plays a role. So you have to keep that bridge open. You have to have that door open all the time, such that when timing meets the opportunity, meets the right idea, meets the right founder, everything materializes. And I think that's how this opportunity came to be. We did that with a lot of investors. We marketed the company. We had road shows, and every conversation was so valuable to be able to have deeper and better conversations with the following investor, or with the following person that you're talking to. So it's the perfect way to learn about your business when you're talking about it to other people and where you're being constantly challenged.
You mentioned that you relied on your personal board of directors quite often throughout the entire journey. Would love to learn, number one, how did you build your personal board of directors? And then number two, do you have like a set timing, like a traditional board where you meet on a quarterly basis? Or is it more of like a close-knit circle of friends that you reach out to every once in a while to talk through difficult topics?
It's the latter. I mean, I would really hope that we would have like a quarterly meeting and everyone would, chat and discuss. But no, it's a metaphor to eventually have a close group of friends, colleagues, people from your past that you can consult with, that know you, and that's very important because they have to really know you to give these true advices, and that also are people that have seen you gone through things. So to me, it has a combination of family, colleagues, friends that have known me in different stages of my life, such that when I want to, ask for an advice regarding something, I know who to call because I know that person knows more about me in this sense than the other, right? But the good thing, and I think this is the key, you were asking before, and it happens with investors, is you don't always reach out when you need help, right? Because you reach out sometimes just to discuss how they're doing, just to ask about how they're doing, just to keep them in the loop of what has been happening. And that generates this, more natural conversation versus just a consultant, right? Whereby I need help. Hey, I'm calling you because I need a favor or I need an advice. No. So this board of directors, and it happened with the investors as well, it becomes these people that you're reaching out to tell them about how things are going, such that I think that selflessly you are looking for them to be on top of what's been happening. But eventually, in one of those conversations, they'll drop in some of these advice that is going to help you make better decisions. Now, they are aware that they're part of the board of directors because I've been explicit about it. So that's also very important because they know that they have that responsibility and they're on board. And they, I think, also are thankful for that.
Do they have it listed on their LinkedIn experience?
I hope. But no. That would be great, having this, board of directors of Nico Estrada as part of your LinkedIn.
But, you should create like customized glassware or medals and send it over to them. Nico Estrada's board of directors.
I should also send them meeting minutes, the minutes afterwards. But no, I think it's one of those an advice, to be honest, that my brother gave to me. My older brother, he also has that same BOD, and it's paid off for me.
Yeah, thanks for that. And I think I want to wrap it up touching again on that massive $250 million round that you guys that just raised. What is, and it's it's a massive achievement. I mean, it's one of the biggest rounds that's been raised definitely like this year in Latin America, especially in such a tough climate. But what are you going to do with all that money? What's the plan? What's the vision? What are you, putting in place over the next, coming months, years? And then what's the ultimate vision for VEMO?
Yeah. So first is we got to be very disciplined, because you're right about the scale. Is not normal, particularly in these circumstances, to raise this amount. And from a CFO perspective, one of my main goals now is to be able to spend this money or invest this money in a very disciplined way to translate this into scalable impact. Now, I think the focus is threefold. I think one is expanding our public charging network, especially, in other parts of the country. We've focused in Mexico City and in the main cities like Guadalajara, Monterrey, and so forth. But there's an opportunity to increasing our footprint in these other cities. Second, grow our EV fleet across both ride-hailing and also our commercial fleets clients. We all today only have the ride-hailing EVs in Mexico City. So next up, Monterrey and Guadalajara. And lastly, strengthen our tech-enabled capabilities. I think we're all today very aware that every company needs to have very strong tech-enabled capabilities to be able to scale up in the way that we want to. So those are the three focus areas in what we're going to be investing the money in.
Yeah, sounds good. Well, we're excited to see you guys continue to grow. I'll be waiting for the option on Uber when I'm in Mexico City and DiDi to select VEMO only.
Yeah.
Or maybe there's an option. I mean, there's an option to select kind of like eco, right?
Yeah. I mean, you do have those options in other markets. In Mexico City, you don't have them today, but we're positive that that's eventually going to come, right?
Yeah, give them time.
Yeah.
I'm looking forward to the day when we get to do part 2 of this podcast and you guys are going public.
Yeah, thanks. I'm looking forward to that day as well. We have a clear North Star and that would be a great moment to celebrate and cheer with people that supported us, including yourselves. Thanks again.
Yeah, don't forget about us.
Yeah, no. I won't.
We're here from the start.
Cool. Well, Nico, this has been a great conversation. Thank you so much. I'm glad that, we got connected. We had a chance to do this. And yeah, congrats again on that raise. And we're excited to follow VEMO's journey.
Thanks. Thanks to you guys as well. I'm a huge fan of you. As I told you at the beginning, I think you guys walk the talk. I think you guys are consistent, coherent with what you say here and what you actually do in your real life. So I admire that and I wish you the best. Thanks for having me and thanks for being interested in VEMO.
Amazing. Thanks, Nico. Thank you for tuning in to another episode of La Frontera. We hope you enjoyed the show. You can listen to more great conversations on our Spotify, as well as on your other favorite streaming platforms. You can find us online at lafronterapodcast.com, and make sure to subscribe to our newsletter for show notes and to stay in the loop for new content. Ciao for now.